What's going on, Z Traders? Zeno Trader here, and today we are coming at you with your daily market recap. If you find any value, of course, in what we do, consider subscribing for more content and market updates. And if you wouldn't mind destroying the like button for the YouTube algorithm, follow us on Instagram and join us live every day, Monday through Friday during market hours on our Discord server, where we have over $5,000 worth of learning materials, all for the wonderful price of, drum roll please, free 99. That's right, absolutely free to join. The link is posted, as always, in the description below. Be there or be square. Lastly, remember, this is not investment advice. This is for educational purposes only. Do not hop into anything discussed here without your own due diligence, as these are not trading signals, but rather my thoughts on specific securities. So, ladies and gentlemen, with that being said, let's get into it. Firstly, I'd like to apologize about the audio in yesterday's video. The editing software has been a little bit wonky that I've been using. I don't know what's going on with it. I don't know if it has an update or something, but I when I went back to listen to the video, I was like, oh gosh, this is horrible. So I don't know if you guys experienced that or if it's just on my end, but if you did experience that and you watched the video, I just wanted to apologize for that. I am switching the video editing software that I will be using moving forward, and it should be much better. Let me know in the comments what you think. Anyways, let's get to it. So the Dow Jones Industrial Average was up 267 points today, which, of course, given the circumstances, is absolutely absurd, but whatever. Relatively lower volume in comparison to previous days. We are also, once again, overbought on the RSI, on the daily chart. MACD is not telling us anything. We are now officially above the 200 MA on the Dow, which I told you guys last week. We don't typically stay up above this for long, but it appears that Wall Street is shrugging off all of the negative news going on right now in the country with respect to all the civil unrest and protesting and everything. I guess Wall Street doesn't give a flip about that, so whatever. As for the SPY, she was up $2. Well, $2.53 today. Yeah, so not terrible, but still not what I expected. We came out of the gates down. But we did recover towards the end of the day, and she did rally. So now we're establishing a pretty strong runway here, and it appears that we have officially escaped or reached escape velocity from the 200 MA here, which is very interesting considering the backdrop of the economic situation we're currently experiencing. It too is also oversold. We do know that that will not last forever. You can't be oversold forever. What goes up must come down. Our MACD is not telling us anything, but we do see that the volume on SPY today comparatively, according to this chart anyway, was a little bit lower than previous days. So I think it was like 73 million in volume, which isn't bad. It's not, it's pretty decent. So let's take a look at it from this perspective. So, we are up against a pivot point here. That's very interesting. So, wonder how this will play out. Well, if history is any teacher, maybe we come down off of this, because there's no reason to break right through it, right? I mean, unless there's some sort of crazy good economic news, we should reject from this level, all things being equal. And then if we come and look at VIX, well, I don't know. We may have a little bit of ways to go because VIX looks like it has a little bit to go before it hits S1. Because I'm figuring if VIX hits S1, it'll bounce, and that would mean that SPY would go down. So SPY might actually mess around, and let me zoom out to see if there's any other levels that are before we get there, though, because I don't want to be mistaken about that. But yeah, I mean, it looks like there's a little bit of runway for VIX to continue to fall, which means there's runway for SPY to continue to pump. And because VIX is further away from its rejection than SPY is from breaking through R1, I can only surmise that we might actually break this. But again, there is no rhyme or reason to this. It's all Fugazi, it's pixie dust, unicorn tears. So take it with a grain of salt. I would look for some SPY calls to be safe above 310. I would look for SPY puts below 304. With volume, of course, and confirmation on multiple time frames, and also, if you can, try to get some technical indicators to confirm it too, like MACD or RSI and things like that. So if they agree on multiple time frames, you should be good to go. So with that being said, let's take a look at some of the economic news that came out today, which really wasn't important or anything significant, to be fair. We talked about it yesterday. We got the weekly crude, which came in. There was no really forecast for this, and total vehicle sales didn't release. So those were the two biggest things today. Tomorrow, it looks like we got some mortgage stuff and service PMI. That's important. Durable goods, non-manufacturing data, crude oil imports, inventories. Okay, yeah. So tomorrow is actually going to be. Looks like there's a lot of information coming out tomorrow that we're going to have to trade into. So we have to be careful trading between 10:30 for 9:30 and 10:30. Just be careful in the markets during that time. So back to the consensus for SPY. I believe that SPY will probably get through R1, chop around, and then come back down. Again, there's no really reason for us to be up here, but the fact that there is no terrible news is great news, I guess. The market is concluding that, so they're shrugging off everything else and like, oh, just keep this moving on up. And then, all of this is being propped up by, the Fed and stimulus and other measures. So I don't know. We'll see what happens. Everything's opening back up. Things are, starting to slowly come back online. So, we'll see what happens. We talked about some earnings stuff yesterday. Crowd came out with some earnings. They were actually down a little bit today, but after hours, they're up $5.75 because they beat. They had a big beat, actually. So if CrowdStrike beat, that's good news for things like DocuSign and Cloudera and things like that have earnings coming up this week. We have positions in both of those, but we'll talk about that here a little bit in a second. So Amazon was something that somebody called out in chat. The puts, somebody got in puts right here, wrote it down, and then it bounced. I couldn't see. I couldn't actively trade all day today because I had a whole lot of stuff going on. I took I took a couple trades at the beginning of the day and just, got out and let it sit. But I wasn't able to actively like buy and sell. And today it would have been a good day if I could have, because after the fact I saw a lot of plays that set up. So this was actually pretty good. So with that being said, let us get into the plays. So on my small account challenge, nothing to write home about, just not that much, not up by that much today. It's a hold that I'm holding. I'll probably get out of this position tomorrow and take, all of my profits. So I only have 2 contracts in this position. And then that's 𝘉𝘓𝘓, by the way. So this is my P&L for today.
Oh my God!
Oh! Somebody! Oh! He needs some milk.
Well, at least it was at 11 o'clock. Yep. Check it out, folks. This is what we got going on for you today. Some traders just show you all the gains and all the money and all the, success, and just, oh yeah, just trade. You could become a millionaire tomorrow. And I'm here to tell you guys, it don't work that way. It does not work that way. You're going to have to sit through a lot of this at times before you can see green. Now, you're probably thinking to yourself, how the fuck did he end up in such a terrible situation? Such a regrettable state of affairs. You've been doing so great lately. How did we get to this position? Well, I'll tell you. Let's start with CLDR, which is 𝘉𝘓𝘓, right? So I saw that in the morning, 𝘉𝘓𝘓 had come down and, hit a support level, or what I perceived to be a support level. I drew the lines on the chart. I'm like, oh yeah, about to get me some calls. So I waited till like right here. Yep. Got some calls, and I saw this candle close. I'm like, all right, we about to be in the building, right? Just keep on, because I was like, all right, we filled the gap, because I saw the gap fill, so I was like anticipating to come down. I'm like, all right, come down, down, down. That's fine. I don't care. Come on down. After this gap fill, we're going to go right back up, right? So at least I expected it to bounce, and it did, but not permanently, and it fell off the cliff. Now, typically, what traders would have done is they would have cut this position. They would have had a stop loss or something right here. I was actively looking and assessing the chart, and I had to think to myself. I said, okay, self, sure, we broke this support, but if you look at the daily chart, and this is why trading in broader contexts is so important, because you'll look at this situation and panic. You'll look at this on this small, tiny little 5-minute time scale, and you'll panic like, oh my God, I got to get out. I got to get out. And I was like, nope, I see the 200 MA right there. We're not going to go below the 200 MA by that much. We'll probably hit it and bounce, or go a little bit below it and bounce. 200 MA is like the line of last resort. So I said to myself, we're probably, it'll bounce, it'll come back. And they got earnings. I got fooled. I got shook out like this before, and plus I got too much red. I can't realize that loss, because it happened so fast, and the screen just went red so fast. I couldn't, like, I was like, there's no way I could realize this loss. right? I can't do that. So like a $5,000 loss, I can't realize that. And that's another thing you might notice is that at this time, all these positions are still open. So I'm not realizing this loss. I'm not chalking it, especially when I look at the chart and I know what I'm doing. Okay, you got me right here. Joke's on me. Fine, whatever. But you're not going to get me right here because this would have been a re-entry for calls. So I was like, you know what? Since the 200 MA is right there, I'm going to just hold it. F it. And, you know, we recovered throughout the day, going up and up and up and up and up. And we finally got over where I got in at. You see that? Now, what if I would have panicked in this moment and not understood how to do chart analysis? Right? We were also oversold on the RSI. Look at everything that's coming together to make this determination, right? So I'm like, nah, I'm not chalking it. I'm not getting out. It is what it is. We're gonna be in here for the duration. All right, we're gonna ride this out. Rode it out. Boom. Check it out. Right now, let's take a look at the second position. DocuSign. Same, different stock, same story. So what's occurring here is that I am correct about the direction. I just get in too early. Yeah. So I drew my stuff on my chart, thought I was going to do something like, oh yeah, we about to be in the building. We got through the gap down. Same situation, different story. Boom. Wrecked. Big Bubba in the shower. All right. In prison, dropping the soap. Look at that. This right here, that's what this corresponds to. All right. So I want you guys to see this. Same thing. 200 MAs right there. Same scenario. Just got in too damn early. All right. So I did the same thing. I was like, all right, we're going to bounce, whatever. Came back end of the day. Didn't quite get to where I was, the opening, but I was like, they have earnings, they're going to kill it, they're going to go up tomorrow. And see, another thing I want to bring to your attention about this, and I'm glad that I thought about this. There was a couple, like I think last week or the week before, I was playing BJ's before earnings, right? And a similar scenario happened where I got into it and it took a shit after I got in. And I got shook out. I got out. And the next day, if I would have just held for the one more day, the freaking thing went to the moon. I was like, son of a bitch. So I've seen this before. My analysis was correct. I just wasn't patient enough to wait until the reversal. See, where I messed up at is I didn't get confirmation on a reversal. Learn from my lesson, folks. Don't have a P&L that looks like this. All right? And I had to learn this came over time of losing a lot of money, how and when to have diamond hands or animanium hands. This was diamond hands dipped in animanium, dipped in, freaking vibranium. Okay, whatever the substance is that can survive the core of the sun or Jupiter, whatever that substance is, that's what my hands were coated in. But you learn that over time. But you don't just have diamond hands, those type of hands with any play in every play. You have to look at the chart and do your due diligence to determine if you should have diamond hands. If you determine that this is not a good scenario to have diamond hands and there's no analysis that supports you having diamond hands, get the F out. All right. But I saw this chart and I was like, nope. I could clearly see that the 200 MAs right here, we're going to bounce. And it did. Right. We were oversold. We're not going to stay that way. Right. Same scenario, different stock. And we ended up closing up. So the last position was Zoom. Right. I got into some Zoom calls trying to play the continuation. This was more of a crapshoot gamble because I made so much money over the past couple of days on Zoom. I was like, why not? Whatever. And got clapped. But, learn from this. Now, the reason I'm talking to you so calmly is because this isn't how the day ended. Remember, this screenshot was at 11:01 a.m. in the morning. Check it. Boom. Look at that. You see that? It's not a win. It's not a green day by any stretch of the imagination. But look at the contrast, folks. Look at this. 11:01, 3:56 in the afternoon. Now, I want you to ask yourself a serious question. As a trader, would you have the guts to sit through this? Would you have the animanium hands, the diamond hands it takes to trust your analysis this much? To say, you know what? I fucked up. I got into the play. I bought calls way too early, right? But I'm right about the overall direction of the stock. I know I'm right about the direction. I just got in too early. And you know what? I just have to walk away and sit there and just put alerts on and just monitor it. And then look, end of the day, what do you know? Went from being down $8,000 to being down $690. Most people would have cut this. Some even before, it got this bad. Now, I will say, don't be like me and just hold everything. Like I said, I had to qualify it with proper analysis. Also, these things happen really fast. Okay. And today was busy for me, so I couldn't be at the computer all day. So by the time I'm looking up, stuff is just going south, and I'm like, it's too late for me to get out. But my analysis was correct. The directions of the stock were correct. And I was in the building. Okay. So fortunately, I got out of those Zoom calls. I was not staying in those for earnings because, that's nobody knows what's going to happen. Like, there's no analysis that can tell you what's going to happen after earnings. So I got the hell out. And with good reason, because they're freaking down $8 after hours. That's outrageous. But yeah, I just wanted to contextualize that for you. Okay. Diamond hands. Patience is very important. It's right up there with emotional discipline, but you need emotional discipline in order to have patience, right? So if you want to be a profitable trader, you need emotional discipline. You need diamond hands, but you got to know when to have diamond hands and when to cut and get out. If there was no bottom, I wouldn't have stayed in those trades. If there was no analysis that said, hey, there's going to be a bounce, I wouldn't have stayed in those trades. Now, tomorrow, those swings will likely be green, and we'll win those positions, and we'll get out with a profit instead of taking an $8,000 loss, because I had the emotional discipline and the wherewithal to hold in that particular instance because it made sense. So learn how to make great analysis of charts. And when you learn to do that, trust your analysis. Okay. So that's what happened to me today. So let's get into the questions. So this question comes from our Discord server, where, shameless plug, you should be at if you're watching this video. We're free to join, and we're there Monday through Friday during trading hours and even some weekends. We need to start. I got to get back doing the live chat. It's been busy for me, but yeah, we have a question from there. In the video, can you talk about dynamic price levels, VWAP, EMA, SMA, why you prefer using one over the other in different time frames? All right. So I use a combination of charts, right? I use these from barchart.com. They are awesome. I use TradingView, obviously. I use, TOS, and I also use Fidelity, because they all offer different perspectives that the other ones kind of don't give you as good, right? So everybody's got their own pivot points and, levels, and so you can kind of compare and contrast and see and get different perspectives. But the majority of charts, I have the 50 EMA, the VWAP, and the 200 MA, because those three are significantly important when determining support and resistance. Okay, so when you have pivot levels that line up with the 50 MA, EMA, or the VWAP, or the 200 MA, what that tells you is it's a confirmation of how strong that support or resistance level is. Okay, so if you have the 50 EMA and the VWAP trading on the same level as a pivot point, that chances are that pivot point is going to be a really strong support or resistance, right? So on TradingView, I just use VWAP. See, you can't really see VWAP on TradingView all that good. Well, this is an hourly time frame. I use, and to answer your other question, is that I use the hourly time frame to trade, and it made a big difference, because remember I told you you have to have patience as a trader. Well, nothing helps you develop patience more than trading with hourly time frames, because you're not looking at minuscule movements from, oh, it moved, 2% in 5 minutes. If you look at the hourly chart, or more importantly, like the daily chart, right? There's no need to panic, because it all trades within these candles. Like, it's just a little movement during the day. These are daily candles. So, up, down, up, you know what I mean? So there's no reason to really be afraid. It takes a lot of the fear factor out of it. Now, if you're trading on 5-minute candles, like these, you got a lot to be afraid of. But because I traded on hourly time frames, I wasn't scared of this. Because if you look at the hourly time frame, and then you can see even on the hourly, well, this is the 30-minute chart, but if you look at the 60-minute chart, right, and even the 30, it came down to the 50 EMA, right? So we got to get back to VWAP. Price always trades along VWAP on the hourly chart. So if we get below it, we got to get back to it, or on it, or above it. That's just the way it works, right? And then on the hourly charts, boom, like you could make so much more money trading hourly charts than 5-minute charts, in my opinion, because you would have seen this, and you would have saw this pin bar, like, oh, snaps. Let me get the confirmation, though, right? So if you wanted to be super conservative, you could have waited for this hourly candle to close too, and then got in on this one. You would have had a heart attack right here, but if you would have held for 2 more, it would have took 3 more hours for this to pay off, and then you would have had some after hours heart attacks. But then the next day, heart attack, but then zoop, you see. So hourly time frames, I don't know. I just think it's much better, because you don't panic on every little move, and things play out typically the way you need them to on longer time, or the way you expect them to, because the analyst of the chart is way more accurate, right? So we'll see what happens. But yeah, I use 50 EMA, 200 MA, and VWAP. Those are like my main things, and I use the hourly time frames, and I use 5 minutes for confirmation. So what you could do is come over to the daily chart, 5 minutes. So like if the hourly chart, you would use it to get in a more, a better entry. So like if you see the hourly chart trending down, like if they're in agreement, if they're both coming down to a rejection of a price level, you wait for the bounce, right? You if you wanted to be super safe, you could wait for the hourly close of the bounce from this. So let me see. Yeah, so look at this. So we got the rejection, we got the pin bar on the hourly chart, and then you wait for this candle to close if you want to be sure, and then wait for the confirmation of the turnaround. We don't just hop in, even though if you know what you're doing and you want to be risky, you can hop in at the opening of this candle, but I recommend waiting. So that would be 2 hours of waiting time, and then hop in on this candle, and boom, you're in the building. Profits, get out. Or, and then you see it fall down, get back in, profits, get out. And, you keep doing that. So, and then you could use this for confirmation, right? So on the 5 minute chart, that's what it looked like. So actually, see, and you got to be careful because you would have got faked out, because you would have got in, you would have used this 5 minute close as confirmation, and you would have got in and it would have went up. But then you would have had to have adamantium hands to hold this, because most people would have cut like around here, and it would have went down and then popped right back up, and then you would have been like, damn it, and then boom. So it's just about really paying attention and knowing and doing a lot of accumulating a lot of knowledge in the market to know how to utilize this stuff correctly, know when to get out, and the longer you do it, you'll develop a sixth sense about this stuff. So that's pretty much how I would answer that question. So hourly time frames with 5 minute confirmations, 50 EMA, VWAP, and 200 EMA. I don't like crowded charts. Everything else is noise, and I use TradingView for pivot points, and that's pretty much it. So if the pivot points agree with the 50 EMA, VWAP, and 200 EMA, it's a stronger support or resistance. So pivot points are very powerful because a lot of professional traders use them. So they traders from around the world look at the same chart you're looking at. So it kind of becomes a self-fulfilling prophecy, So so that's basically the answer to your question. And that's all the time we have for today. Remember, plan your trades and trade your plan. Bulls make money, bears make money, but pigs, you know what happens to them? They get slaughtered. Don't forget to subscribe and hit the notification button so you never miss an episode. Follow us on Instagram and join our Discord chat where we are live until 5 and we do something before 2 something. The links are in the description below. Until next time, Xenotrader out.